Time for some common sense about the stock market and the economy. Craig Bolanos is taking notes on all of the action for us. Craig, let's start with your recap of the first quarter when the stock market came roaring back with that big rally.
First on my list, growth dominates value. Growth stocks were on a tear in the first quarter compared to their value counterparts, courtesy of mega tech stocks. Again, last year's losers being this year's winners. They recovered some of the ground that was lost, and a U.S. consumer that was relentless didn't slow down. Tons of meals and entertainment, travel and leisure, and that boosted the consumer discretionary growth names. Part number two, return of tech. Again, after that 30% beat in 2022, technology came roaring back. And it wasn't the fundamentals. It certainly wasn't the valuations. I didn't see any positive earnings revisions. It was simply the case of, as I said before, last year's losers being due for a bounce. And once the momentum started, all the trend followers and algorithms piled in, and that gave tech a good bid in the first quarter. There was also a concentrated rally in the S&P 500. While the broad-based index provided solid ground, almost all of that growth, 88% to be exact, came from some familiar names. Apple, Nvidia, Tesla, Meta, Alphabet, Amazon, Salesforce, AMD, and Broadcom. Narrow leadership is clearly abound, making the rally not on the most stable ground. And last but not least, financials, they were a drag. And it's not a surprise that the banking crisis, and I certainly mean banks failing, I would call that a crisis, it didn't help the sentiment. And financials definitively suffered in Q1. They were a broad-based detractor. And we're going to have to see what happens as these companies deal with what I call an inverted yield curve, higher costs of deposits, and certainly more regulations are yet to come.
Moving forward, what's your outlook, Craig, for the second quarter? Some people are still worried about the banks, inflation, and the possibility of a recession.
Yet despite all those things, the market did what it so often does. It climbed the proverbial wall of worry in the first quarter. Now, the regional banking crisis, despite all the comparisons to what I call yesteryear, aka 2008, 2009, this is not the same. And hence, we aren't looking at a financial apocalypse. Second, the inflation. I believe the inflation will continue to fall in the second quarter. Not at a big dramatic pace, but again, slower reductions month over month. That's likely what's to come. As far as economic growth goes, the possibility of a soft landing is still here. But again, I phrased it that appropriately. It's the possibility. With a more mild contraction in consumer growth on the back of what I think is going to be some elevated unemployment numbers in the months to come, that's probably a little bit more likely. But again, even if we tip into that recession, not all recessions are like the Great Recession. I think this is going to be relatively mild as we work our way through the slowdowns. And as far as the rate hikes go, after what was nothing short of the most intense set of rate hike campaigns almost in Federal Reserve history, I think we're likely to see them pause. And we're going to get evidence of where that lands in the May Federal Reserve meeting. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We're here to help you get retired and stay retired so that you can live life more, worry less. Connect with us on our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.